Ladies and gentlemen, Greg Michalowski from ForexLive.com. This is a Kickstart video where I take a look at three of the major currency pairs, the Euro versus US dollar, dollar versus yen, and sterling versus US dollar. Today's date is October 11th, 2024. Let's get started. We had the US PPI data come out, and it was largely mixed. There was some weird revisions higher in the year-on-year levels, but the headline month-on-month data showed PPI final demand at 0.0% and the ex-food and energy at 0.2%. The 0.0 was lower than expectations, so that's good news. But the core measure at 0.2% was as expected. So there'll be a number of crunchers who take the CPI data from yesterday and the PPI data from today and try to figure out what the core PCE data will show at the end of the month, and that will be an influence. So we are seeing the two-year yield down to about 3.7 basis points, which is near the low. The longer end is off its highs with the 10-year down, now up 0.6 basis points on the day. We are seeing the Dow Industrial average down around 33 points, it looks like, and the S&P and the NASDAQ indices are also lower in pre-market trading. So with that said, let's take a look at some of our major currency pairs. We'll start by taking a look at the Euro versus US dollar. The 4-hour chart has seen a move to the downside in trading yesterday. It came down to the low of our swing area through here that I had outlined in previous videos as a target area. And that area was defined by a number of different swing lows and swing highs, particularly right through here before the market moved to the upside. So we returned back to that area right through here and found support buyers near the nice round number of 109 as well. We moved up in trading, and we moved back toward that 100-day moving average, which you can see traders try to keep the price below, but moved above that level and then moved back to this swing area through here. I won't outline all the ups and downs in that, and 61.8% retracement, but we fell short of the high price that we saw. I guess this is yesterday's trade or maybe on Wednesday's trade, and then fell off after the data. So we are seeing the dollar move, the euro move a little bit lower, the dollar move a little bit higher after the report, trading above and below the 100-day moving average over the last 7, 8, 9 bars on the 4-hour chart. So there is some apprehension to either move higher or lower. We held support against the swing area. We held, for the most part, held resistance against the swing area up here in the 61.8% retracement. So make it what you will, but it does seem like the market is just trying to battle it out between the buyers and sellers and between technical levels. If we start to move back above the 1.0949 level with more momentum, that would increase the bullish bias. If we move back down toward this swing area right here, it might be a little bit more difficult to get to or through in trading here today because it is Friday. But nevertheless, if we do break below that level, then we start to look toward the 200-day moving average and this swing area going back to this period right through here, where you can see we had a floor, and then became a ceiling, and then became a floor moving higher. So that is going to be a key level on the downside on further weakness. Let's take a look at the dollar versus yen next. And again, we'll look at the 4-hour chart. And what we saw in trading today and this week was today just a modest increase off of low prices from yesterday. Yesterday, the move to the downside did find support ahead of the 38.2% retracement at 148.116. On the top side this week, we did break above this high right through here after trying to hold resistance against that level. But the break, as you can see, was very modest. The final move to the upside here found willing sellers that pushed the price right back down toward the 38.2% retracement in the same 4-hour bar. So there was a disappointment up here near the 149.356 level. We're going to need to get above that level and stay above that level to increase the bullish bias. Have traders looking toward the 50% retracement. Note up here the 100 and 200-day moving averages are now converged at 151.198. That will increase this level's importance going forward. So not only do we have the 50% retracement, we have the two 100 and 200-day moving averages up there, which may be a magnet of the price toward that level with higher dollar. But that level should give traders some cause for pause, or this area up here should give traders cause for pause. On the downside, what it seems to be clear is we need to get below and stay below the 38.2% retracement level. That's this level at 148.11. We also, this week, which is of significance, is that you see this ceiling right here, that ceiling connecting a number of different highs going back in time. Well, after breaking above, we did hold support against that level earlier this week. That gave the buyers a go ahead. So that tilts the bias a little bit more in favor of the buyers. Just holding that level was nice, and also holding the 38.2% retracement is also positive for that pair. Finally, let's take a look at the sterling versus US dollar. I'll start by taking a look at the 4-hour chart. And in this situation, the price moved below the 50% midpoint of the move up from the August low to the high price that we saw in the month of September. That level also happened to correspond with some levels right through here. We get it on the arrow here. Well, we had a high right here near that level. We had a high right here. We broke above that level. We then used that level as support right through here before breaking lower. Tried to stay below that level through here, but couldn't do it, and then reversed higher. We came down toward this level and traded earlier this week, and then broke through it, but failed. And then had one little try below the level again. But moving back above that level. We're just currently above that 50% retracement, 1.30488. We're going to need to move below that level to increase the bearish bias in this current currency pair, so be aware of that. What is also interesting is if we take a look at the hourly chart, and if we look at the hourly chart, look at how the 100-hour moving average has found resistance sellers against it, not only yesterday, but today, as the consolidation and the corrected move happened here, the moving average caught up with the price. So getting and staying above the 130.76 level would be somewhat at least bullish in the short term here, give the short-term buyers some hope that a rotation back to the upside is warranted. If it can't do that, then the sellers remain more in control. Get below that 50% retracement level opens the door for further downside. So there you have it. A look at 3 of the major currency pairs to kickstart your Friday. TGIF to all. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.